It's a Bitcoin podcast. The only one that's making your money is you. Listen to the Bitcoin podcast. So hold on and listen to the Bitcoin podcast.
Hello, everybody. Welcome to another one of the Bitcoin Podcast's interviews. Today, we are joined with Tascha from Tashca Labs, a macroeconomist and technology investor and tweeter extraordinaire. I know that's how I've come across you, as your tweets on how to value this industry, valuing different projects. And, welcome to the show, Tascha.
Thank you. Glad to be here.
Nice. So, first of all, I have to ask this question. It's kind of a standard question on most crypto podcasts, and that is, there was a time before crypto where most of us were doing something different, right? I myself was a teacher. Jessie was an engineer, and now, and you were probably an economist. I'm just assuming. But would you like to tell us more about, before you got into crypto, what you were doing before? And then I want to go into detail about like why you're like, oh yeah, I'm definitely going to get into crypto.
Well, I'm not sure I'm in crypto. I have a lot of other projects as well, but let's just say I first got to know the industry in 2016, 2017. I was very active in the startup community, and I had friends who were starting new companies involving blockchain. And at the time, the running joke in the startup circle is, if you want to get VC funding, make sure to put AI and blockchain in the first sentence together in your pitch. But at the time, it just seemed to me not really a feasible proposition at the time, because I remember, seeing pitches about, using blockchain to, track like a production of cheese, or, track like airline flight schedules. And it just seems like, people have the solution, and they're looking for a problem to solve. So I think that was now looking back, that was, indeed the case, that we had a huge boom, but not much really like a groundbreaking product or value added came out of that quote unquote cycle, right? So, but this is but that was a few years ago, and really I got seriously interested in crypto since the pandemic started, because that was when DeFi started taking off, and I took a more serious look at DeFi, and I realized there is something actually revolutionary going on there compared to the products that I've encountered before in the blockchain space. So, from there, like everybody, most people, you went down the rabbit hole of crypto, and you got to know more and more use cases and the projects and value propositions from there. So for me, I am a macroeconomist. I'm also a startup founder. So I come into the space, I think, from the perspective of a mix of macroeconomics, and technology adoption cycles. So from both angles, this is a incredibly interesting industry that I believe is going to change the world. Well, if not already. But we're changing on a small scale. $2.5 trillion asset class, which is drop in the bucket.
Yeah, it's surprising that is a drop in the bucket. I can't even like imagine $2.5 trillion, but it's not that much. No. Like when you look at the grand scheme of things, it's not that much, but we feel like it's a lot. That's for sure. At least my family members.
It's because of the compressed time scale, right? It's because how fast the thing went up. Like this past year, the whole entire crypto market cap went up nearly 200%. you never heard about like such thing happening in the stock market or in real estate market, right? If real estate going up like 15% a year, people think that's, already some kind of bubble going on.
Yeah.
But those are really, those assets are much bigger, value caps. Real estate globally, probably 350 trillion. Global bonds market, 150 trillion. Equity market, probably on the same scale. So just do the math, how small crypto still is.
So is it a zero sum game, and meaning that crypto has to get bigger and those other markets get smaller, or can they all get bigger at the same time?
I think what one thing crypto enabled is I would call the hyper financialization or hyper tokenization of everything, right? So looking down the road, I think in 10, 15 years, we will see probably all the things that has a cash flow attached, all the things that you can derive a value from will probably be tokenized in one way or another. So this definition, the definition of the financial asset per se is changing because of crypto, right? So 2 years ago, you would not call a JPEG a financial asset, right? So now it seems like it's becoming more and more accepted, even by more the mainstream society. And people start to understand, what this is all about. So to answer your question, I think obviously those traditional markets, they're going to continue to grow unless you believe that the world GDP is going to shrink down the road, which is unlikely given the huge productivity growth that we are seeing down the road. So those assets, they are moving in conjunction with the growth of the economy, more or less, right? Real estate, I'm talking about real estate, bond, and equity. But I think what you will see indeed is that, but in terms of rate of growth, I think crypto would definitely, it's already far outstripping the growth of those assets. And going forward, I believe it will really steal the thunder of some of the TradFi asset classes, especially real estate, because I talked about this the other day in my YouTube channel also. It's really a pain in the ass to actually hold real estate. Okay,
Yes.
The buying process. The buying process is just such a pain.
Oh my God, yes. Sorry.
And the holding process, I mean, you have to maintain your assets, and you in order to generate cash flow, you have to work to get people to rent your properties, and you have to maintain, and
Jessie
you
talks
hire
about
someone
this.
to do it. You
Dee
have to
talks about
pay a
this.
commission, right? So all that work to get what, 5% of gross yield. So
I'd rather take that value in Decentraland, and then land goes up way faster than real estate in the real world, and then there's no maintenance. There's no it's completely different.
Yeah, I mean, you can argue, obviously, whether there is a short-term bubble, right? Where it's a short-term access. I think there is, but that part aside, over time, I think even if you take out the bubble part, you look back 5-10 years from now, you will see that people will get attracted to the non-fungible counterpart of real estate more and more, because at some point people will start realizing how much easier this is. Not to mention that because of this is so easy to handle, and you can transact over the internet, and very soon the integration between NFT and DeFi, which is already going on, we're gonna develop a whole lot more, is that it will increase the liquidity of NFTs compared to your real life non-fungible assets like real estate, right? And whatever has better liquidity is going to have a price premium. So I think overall you will see that other travel assets, I don't think they're going to shrink, but they're just going to grow much slower than crypto assets.
It's wild to see all this stuff take shape. Having seen how it started so many years ago, and now how it's going, it's just phenomenal to me. One of the things I find most interesting about your opinions is you said it very poignantly. You said, blockchain should be valued like countries are valued. And can you elaborate on what you mean by that? And then I guess I'll ask my second part of the question after you elaborate.
So so I said that like blockchain, like public blockchains like Ethereum, Solana, Avalanche, those, if you look at those ecosystems, they work in a much they work in a much closer way than how a country's ecosystem works, economic ecosystem works, compared to how a company works. So a lot of people, so that was in response to a lot of these valuations that I've seen, that people are trying to value, public blockchains as companies. So if you value companies, you do like PE ratios or discounted cash flows and see if the thing is overvalued or undervalued currently, right? But you don't ever value the United States economy by discounted cash flow. But
how do you evaluate the United States economy?
I guess that's, give us a short lesson. How do you evaluate a country and what a country's worth? I've never even had to think about it. But
what a country's worth, you look at how people usually compare across economies is to look at the so-called GDP, gross national product, right? Gross domestic product. So that's basically measuring how much is being produced, how much is being transacted, how much value added is being created in a single year or in a single quarter, whatever time frequency that you use. And you compare that across different economies. So in that sense, when people say US is the biggest economy and China is the second biggest economy in the world, they're talking about the GDP. It's so much, how much economic activity is going on in this territory, right? So this, what we call economy is this interconnected ecosystem where different players interact, and there are market exchanges, there are consumption and investment activities, there are value exchanges going on. That is the definition of a economic ecosystem, right? Like the United States economy or Chinese economy. So if you look at this way, it's a similar thing with what's going on in the blockchain space. Is if you look at Ethereum economy, there are a lot of things going on Ethereum, right? Ethereum is not well, of course, you can look at it as the enterprise, but I think it's more appropriate if you look at it as an ecosystem, like a country. And you look at the prospect or the value of this ecosystem by how much is going on, how much is happening in this ecosystem. So how much, DeFi trading is going on, how much NFT market exchanges are going on, how much, people are using Ethereum for other use cases like gaming, metaverse, so on and so forth. So all these are the virtual counterpart of real life economic activities that's happening in this ecosystem that we call the Ethereum blockchain. So in that sense, Ethereum is similar to a nation state. Once it, right now, I think I did some calculation. It's probably the size. It's a small country. It's the size between like Uruguay and Slovenia. And that is the biggest blockchain in the world, the public smart contract chain in the world. It just tells you how far we have yet to go, right? So that is in the nutshell of that thesis. Is blockchains should be, you should consider them, you should model them, and think about their valuation in terms of like it's similar to how you would evaluate a country's economy.
How do you match growth from models conducted based on developing countries versus basically L1 platforms? Because the growth is different. It comes from a different thing. Whereas like a developing country, maybe some sort of agriculture. It's definitely not tech, right? That's not going to be their biggest
Sure.
export. Well, for Ethereum, for instance, the biggest booms came from gaming related things, right? CryptoKitties, kind of like a gamification of NFTs early on, 2017. So like, I'm wondering if you had to match industry for industry of a developing country to basically a developing L1 platform, what would be the biggest growing, say, top 3 biggest growing industries on an L1 platform? Would gaming be one of them?
Gaming, DeFi, and NFT and gaming are interrelated. But really, we still it's not a very diversified economy, right? You only have these 2, 3, 4 sectors. Seriously,
Yeah.
that's all that's still going on. But even these few sectors have supported huge growth for Ethereum and other layer ones. So we definitely you don't have agriculture going on in virtual economy unless you count like crypto
DeFi
farming,
kingdoms.
agriculture.
Yeah, exactly.
But it's seriously, it's just people doing stuff. That's how I would understand it, right? It's just people doing stuff, and you want to see you grow, like you want to see more people doing more stuff on this blockchain platform. So you go back to your question. How do you measure this? Well, we don't have statistics offices
It's too early.
on the blockchain to calculate this, but you can look at wallet growth, transaction growth, developer activity growth, because those are indirect indicators of people doing stuff on the blockchain, right?
So what have you seen in terms of like Ethereum's growth? Has it kind of like in terms of gas fees being very high, has that slowed down user adoption?
Oh, for sure. Yeah. If you look at Ethereum's current like usage right now, the active users is not even at the level of the top of bull market back in 2017.
Oh, okay. I didn't know
So
that's something that I didn't know. That's surprising, but
Bitcoin the same.
But
Bitcoin the same. You look at active Bitcoin wallet addresses, same. It's not even back in the previous cycle high level. Okay. So I think it's an indication, while at the same time you do see like crypto's influence and recognition growing at the breakneck speed in society. So what's going on? I think it's just especially the last 6 months, the alternative layer ones are really stealing the thunder from these older chains. And even though Ethereum, if you look at active wallets, it's not as high even in the back in the previous cycle top. But you look at other chains, you look at activities on Solana, on Avalanche, on some of the L2s of Ethereum like Polygon, that is going like a very steep line up. So those are being a lot of the users are being attracted to those alternatives for sure.
So you said you had a lot of friends that were VCs or like startup founders that kind of got you into the space earlier on. So I'm wondering, are they building in crypto still? Are they building products in the space? And if they are,
like I said, the previous waves of the products are different than what you're seeing right now. The previous waves of the blockchain applications were more like logistics, as a lot of like applications for using blockchain for tracking stuff, right, in the real world, and those you have now seen taken off, and a lot of those projects have died. So this round, this round of projects you're seeing are in DeFi and NFT, and more in gaming, which is of a different nature, but from those back in 16, 17.
Gotcha. So
yeah, NFT gaming is going to take off. It's like inevitable. It's going to have to. But anyways, So if we start valuing these public blockchains like nation states, aren't we going to be in danger of them like becoming nation states? Like I feel like things go full circle in crypto. Like we go one way and then we end up finding out we're going the exact same direction we ended up going. And like if so much value gets locked into one public blockchain, that value, I mean, human nature, they're going to try to protect that value, right? So
Who?
would I
Who are
mean
they?
the owners of Ethereum, the people got the heavy bags.
Don't you own the Ethereum? I thought you like it. It's the
Yeah, and I will
nature of public
fight.
blockchain.
I will fight them up.
Everybody who's you're paying for you. Everybody who's using Ethereum, using Solana, are helping to pay for the computation, for the network maintenance, for everything. So it's the reason. One of the reasons, actually, I think the primary reason that crypto has really caught on so much and spread like a wildfire is because of this open this nature of open value sharing, this what I call MODEV, massive open distribution of economic values. So this is the factor that is most revolutionary about crypto. It's a drastic change in the business model, in the economic models of how an economy is, how economic activities are being organized and how values are being distributed. So it's a more open and more equitable system, and that is the part that is drawing in, new users and new adopters like crazy.
You said massively open distributed economic
MODEV.
MODEV. That's marketable right there.
Massive open distribution of economic values.
Oh, you better NFT that shit before somebody who listens to this show does and try to steal your thunder.
It's steal away. The more people know about this, the better. I'm not. Why would I? I have no intention to protect this or trademark this or whatnot.
I'm just joking. That's pretty awesome though. It's awesome that you're able to like very succinctly describe how like the value is structured in crypto, because a lot of people aren't even trying, and it's a very good point you make. Is like, are people doing stuff, right? Because that's the point that we're at right now. There's not a lot of stuff to measure. It's just, are people doing things? So, is there? Go ahead, Jess.
Do you mind if I interject? All right, so I have a question about the spread of wealth. Like, I guess people toss around Gini coefficients in terms of wealth distributions in real world countries. So I'm wondering if you compare that to crypto, isn't it relatively high, even higher than real world fiat markets in terms of the amount of people that own the majority of an L1 token, for instance?
That's what I think what you're going to see is there will not be perpetual winners. Okay. So that's why there are people saying, oh, look at Bitcoin, Ethereum got network effect. This thing is going to, I don't know, Bitcoin going to $1 million. Okay.
Yeah.
I think the network effect is going to be shared. And there will be a lot more new projects coming. If someone come into the crypto today, all right, Bitcoin is already like a 50, 60K. Ethereum is 4K, right? And people look at, okay, how much did these coins cost a year ago? Way less. The thing has gone up so much, right?
Yeah.
For new users that are coming into space today, it's in your self-interest to champion the new projects instead of older ones, because that's where your opportunity is to get your own 100x and 1000x.
Yeah.
So instead of getting behind a Bitcoin or Ethereum, you're more incentive aligned
in the short term
to get behind the newer project. Okay. Provided that those newer projects are not are actually have the technical underpinning, behind,
Mhm.
right? So you are going to see waves and waves of this because the crypto user base is still very small. It's under 200 million people population. Okay, you will need several of these waves to onboard crypto to billions of people, and to get billions of people to adopt a new economic paradigm.
Mhm.
And what's going to draw people in are the the profits, the gains they can get
Mhm.
from this space. Those gains cannot all accrue to Bitcoin and Ethereum. It's just not possible. Okay.
Yeah.
You will have
So
you if you have if you have Bitcoin and Ethereum going up the most,
Yeah.
and others smaller ones going up less, you will have the OGs of crypto in Bitcoin and Ethereum being the trillionaires and being the overlord of the universe, right?
mhm.
That is not a feasible equilibrium, because for those for those older coins to go up so much, you have to have new buyers.
Yeah.
Okay, but as we talked about, new players coming into the space, you are more incentivized to back up newer project with newer technology that are also solid, that also have a feasible, like a feasible future,
Mhm.
rather than these older coins. So you see the intrinsic incompatibility here.
Mhm.
So for crypto to get adopted by billions of people, you will need these several waves of new projects, grow exponentially
Mhm.
until they are being, overtaken by something even newer and even, cheaper and faster, more decentralized, or whatever you value propositions you value, right?
Mhm.
See, that's very interesting because it seems contrary to like what a lot of people in Ethereum think. A
Well,
lot of people
To
in
Ethereum
crypto think.
people.
Because Ethereum people want to pump Ethereum, and Bitcoin people want to pump Bitcoin.
Yeah, I mean, I shouldn't have just said Ethereum. I mean, just anybody who's, I guess, singularly focused on one token think that the more time I spend working in this token, the more value it brings to the token, right?
I'm not
So it's
okay.
interesting.
So I'm not saying though. Okay, so I don't think it's a bad strategy if you just want to hold Bitcoin and Ethereum. Would that give you the most? Would that give you the most upside in crypto? No.
No.
But will you go broke doing that? Probably not. Right. So those will still increase. Those will still go up with the crypto market. But what I'm saying is you're going to see waves of exponential effects, exponential network effect that happen on newer projects. And you're going to see several waves of this. What we are currently seeing is the wave of alternative layer ones, but
Mhm.
just don't become an alternative layer one maxi.
Yeah.
So if you just like think you can hold on to this to eternity because those have network effect are gonna go up bazillion dollars, well, they will go up, but there will be newer things coming for
Yeah.
sure.
So
Yeah.
the
I
lesson is
agree.
don't be a maxi.
The
It's like
lesson
Exactly.
is dump your old boomer coins. No, like,
dump your boomer coins. No. So do you see? So it's very interesting. So do you see like kind of a layered?
No. I just like one more thing. I just want to caveat this. Okay, this is not a call for people to go chase the newest shiny objects. There, you have to strike a balance between, is this thing going to get a network effect, right? You don't want to hold on to like a be diehard maxi for any existing projects,
Mhm.
but you don't want to like jump into like every shiny new object just because the thing gonna pump next month, all right?
Mhm.
So you want to strike a balance of, does this thing is this thing showing a sign of potentially capturing network effect going forward, and it's technologically or token economic wise better, compared to the older projects. So you have to look at this from a investment point of view. It's not like I'm not saying every new coin is going to outgrow every old coin. That's not what I'm saying.
Okay.
It does seem though that the coins that experience the biggest growth are not necessarily the ones with the best technological innovations. Like I've seen so many more meme coins and coins that have like a shit ton of VC funding and marketing behind them that have, broken top 10, and they shouldn't even be anywhere near there. Right? So like it seems like I think the best investment thesis is to, never really be maximalist in any one thing, but at the same time, I can't shoot down people for wanting to take these moonshots, right? Because it seems like 2 out of 3 is probably, if it looks stupid and memey and or has like a lot of VC funding behind it, it's probably going to go up. Because it seems to me like when a lot of money is thrown at something and when there's a lot of marketing involved, people just gravitate toward it like a moth to a flame. The people who really lose, those are the moths to the flame. I think the people who are pulling the moths, they're playing with a different kind of money typically, right?
Mm-hmm.
I'm not the type of person that indulge in conspiracy theories. Okay? I'm also not the type of person that I know like VC shaming is a subculture in crypto.
It's very ironic too.
I just don't see the point. Okay.
Mm-hmm.
Everybody has your own way to has your own strategy to play this market. There are people who hold a token for several years. There are people who hold a token for a day.
Mm-hmm.
It's just figure out what works best for you. It depends on your own personality. It depends on what you are better at. If you're better at reading short-term chart, you trade, higher frequency. If you're better at betting on long-term trend, you probably hold a coin for longer. Given that if you're better at betting on longer term projects. For me, I'm in the latter group. I am better at seeing the long term trend. I am not good at telling you what's going to pop next month.
Sure.
So to me, the current projects, the current in the top 10, the alternative layer ones in the top 10 that recently got there in the past 6 months.
Mm-hmm.
You can go check what those are. Okay.
Solana.
There are 3
I'm talking about like Shiba Inu and like Dogecoin.
No, that's not Shiba is not what I'm talking about. I'm talking about the ones that actually have that can actually become a blockchain country, nation state.
So Avalanche, Solana, Matic is Matic.
Terra, Matic, I think it's in the top 15 right now.
Terra's popping.
So
but those all have DeFi markets, right?
So you really look at those. Those are there for a reason, and I think those are there for a solid reason, not just from someone scheming behind. Those are projects that actually got traction, actually got use cases, actually people doing stuff on them.
Okay.
So those are not going to be pushed out of the top 10 or top 15 anytime soon. That's what I'm saying.
Okay.
From an engineering standpoint, Solana has a lot of technical issues on the back end. From an infrastructure standpoint, on being able to run a validator. So we'll see.
Yeah.
I am a huge Solana bull.
Yeah.
A lot of things that the Ethereum community criticizing Solana for being not decentralized and so on and so forth. I just cannot get behind those arguments because I see something different. I see this as chain for a specific type of use cases. They're trying to synchronize the state across the entire chain and be as fast and cheap as possible.
But they're not cheap, and they're also like they've gone down 4 times, right?
Okay, I don't want to go down this rabbit hole about arguing like which chain has a better tech, because that is an endless discussion. Okay,
Yeah.
and nobody's gonna win that argument. What I will ask people to check is you go where the tractions are. You don't just sit there and think about which chain is technologically more superior, because I can give you countless examples in history that subpar tech wins.
Yeah.
I know. Marketing wins.
It's just because it eventually boils down to who gets traction. Okay, so if you think superior tech wins, why is Ethereum even around? Why do we need why is Bitcoin even around? So a
lot of money got stuck.
You gotta look at where the tractions are. I think that's where you will get the most, most good reward for every bit of risk you take.
So I guess I have another question then. As a technology investor, do you see where is the technological breakthrough in DeFi for you that makes you the most excited?
DeFi needs to solve the problem of how to bring off-chain assets on-chain. That's what I see the biggest bottleneck, because in order for the sector to be a proper financial intermediary, like the banking sector, what do banks do? You kind of broker depositors, savers with investors, right? You channel the saving of the society to invest in productive use cases, right? That's what financial intermediary is. And in order to do that, you have to have, asset primitives that can help to support the sector. And part of it is collaterals. For me to go, if I go to a bank, I say, lend me money, they would ask me for collaterals. And what do we typically use for collaterals in the real world? Real estate, bonds, and securities. So that is the largest stock of collaterals that are being used for lending and borrowing. In the crypto space, now you can only use crypto as collateral.
Yeah, so
and that is very limiting, and it makes it unfeasible for anybody to actually borrow money to do anything else except speculating in crypto. So for this sector to actually to actually eat the market share of banks, to actually properly be a financial intermediary, you've got to bring the real world collaterals into the space. And that is not something that you can just sit in your basement and code.
Definitely not.
So I think that's one reason why you're seeing a slump in DeFi. You're seeing like a kind of I wouldn't say the slowdown of innovation. But you see a bottleneck, because all the things that you can innovate by just sitting in your basement and code has already happened, or is in the process of happening. But what is the difficult part is to bridging this off-chain world on-chain. That's the difficult innovation, and that has happened very slowly.
I feel like supply chain visibility was something that blockchains were able to do from like almost day one. Or at least in 2016, 2017, it was possible. But nobody wants to make their own, like Toyota is not going to make their own blockchain, so that Honda can see their supply chain, right? It would create too many attack vectors potentially for one company to, suck up all the materials, the raw materials to create a certain part, or maybe if they have a certain manufacturer for maybe a headlight, maybe they could steal business from that headlight manufacturer. Like I think it's going to be interesting, and I think a visible public blockchain is not going to be the way that real world assets get pulled on chain. It's going to be through private blockchains that connect to, one of these alternate layer 1 solutions. And I think that there's going to be heavy regulation that needs to come down in order for that to happen and to be, safe for all the people involved. But
I agree. I mean, I think there's a company out of England called Ethereum. I think they're out of England. And it's Dr. Vinay Gupta's company that he works with closely. And I think he's an advisor or founder, co-founder, one of the two. But what they do, Tascha, is they work on trying to intermingle like the legal system with blockchains. And they're built on Ethereum, but I think they're going to other chains. And the first thing they did was with gold. And I think they won a court case. Someone was able to prove that their bar of gold was their bar of gold using the blockchain. And I think that is like, you're right. That's the next steps, is there's got to be actual real legal locks between blockchain and real life assets that can be defended and can be stood up. So that's a great observation. And noticing that DeFi has hit a wall because there's only so many ways you can flip crypto. When, if all of crypto goes down, then all of your collateral goes down with it. So it's like, what's the point? So that's good. That's real good. I don't know if I have any more questions though. I'm trying to think of some more.
Well, that's great.
Well, we have some trademark questions. Jesse, you want to get yours first?
Sure. So is what you do actually difficult? And then you can interpret that however you want it to be. Like your job is difficult, or
my job is a joy.
Crypto. Your job is a joy.
Yes. I'm having a ball every day. It's just
Sweet.
But there is so much I just cannot do them all. That's the thing.
Yeah.
I'm very tired. It's the year end. I'm very tired. I need vacation. But,
Yes.
but it's a joy.
So the answer is no, Jesse. It's a breeze. She's like, what I do is
no. She didn't say it's a breeze. She said
didn't say it's a breeze. I said it's a joy.
Yeah. Right,
challenge can be a joy.
I don't want to miss words. My bad. And then we have another and I don't know how I want to ask this one. Let's do, in 10 words or less, can you describe DeFi?
DeFi is a financial sector that runs like a co-op.
That's 8 words. Congratulations. You win a congratulations. There's no gifts or anything. I'm sorry, but
right. I love congratulations.
Congratulations. Well, Tascha, thank you very much for stopping by and putting a halt to the technology argument that we've really been involved with since 2012, right? I guess you're absolutely right. If technology always wins, then the Betamax would still be here. HD.
We always have this conversation every few podcasts. Like technology, the best technology never wins from time to time. And so we know this, right?
Yeah.
We just like to figure out what people, think who we bring on, because everybody has their different thoughts about different things. People are developers, some people are investors, some people are retail speculators. So
Very true. I've got to get back to my chickens. So we got to wind.
Oh my God.
We got to wind this down. Tascha from Tashca Labs, thank you very much for swinging by. Do you have anything you want to plug? YouTube channels, blogs?
Sure.
Birthdays?
You just go to YouTube and search for Tascha Labs, or you go to Twitter at Tascha Labs, and the website is tashalabs.com. It's all very intuitive, hopefully.
Thank you.